Enter the best phase of trading with this strategy. This strategy consists of the strongest and oldest strategy known so far, getting to know Ballinger Bands. The Ballinger Bands indicator has three main lines. The center line is the simple moving average MA indicator. Upper and lower lines, Ballinger Bands, are also derived based on price history. In the following, we explain the formula for the formation of these bands. These lines can be a reliable range for predicting a decrease or increase in price. When the price volatility is low, the bands are close together, and when the market excitement is high, and if the price volatility is high, the bands move away from each other. As mentioned, the main line of this indicator is the moving average line. In general, the moving average is called the basis of indicators, and many indicators use it. If two strong green candles are seen above the moving average line, the buy signal has been received, and you can choose your trading target near the upper band. On the contrary, if two strong red candles are observed below the moving average line, the sell signal has been received, and the target can be considered close to the lower band. Thank you for liking the video. Let's go to the most important strategy from which you can learn a lot. Another use of the Ballinger Bands indicator is to show the emotions and feelings prevailing in the market. Overbought and oversold are two concepts that can be good signals for predicting the future of the market. In the oversupplied area, we are waiting for the market to suffer and the price to decrease, because the power of sellers is greater. In oversold areas, the power of buyers increases and we have to wait for price growth. The area above the upper band of the Ballinger Band is overbought. If the price enters these areas, there is probably a price decrease. Of course, you should definitely use the price action to be more sure. Oversold has also occurred in the lower areas of the lower band, and we can expect the market to rise. Candle understanding and paying attention to the market size can be very helpful in correctly guessing the oversold areas. How to use the Ballinger Band indicator. To learn the Ballinger Bands indicator, it is necessary to pay attention to some points. If the price exceeds the upper channel, the market is experiencing overbought conditions and a price correction and a downtrend can be expected. As each candle is created, the bands also move forward along with the price, so you can determine your target price range for trading according to the bands. Ballinger Bands themselves are also known as support and resistance levels. If you put the indicator on the chart, you will see that many times the prices like this gangs have collided and returned. So, in addition to the support and resistance levels that you have set for yourself based on market history and price action, pay attention to Ballinger Bands. Divergence occurs if the indicator and the price of a digital currency move in opposite directions. This happens a lot. Divergence has its own topic and is not the topic of this article. Just keep in mind that the direction of trend indicators is not always the same as the price movement. It means that the price of a digital currency may be rising, but the indicator has a downward movement. In such cases, you should proceed according to the strategies of the indicator. The price is towards the upper band, rising, and the RSI indicator is also rising. In this situation, the market is bullish, and you can enter a buy position after seeing two green candles. Contrary to the above conditions, if the price is towards the lower band and the direction of the RSI indicator is also downward, the sell signal has been received, and after two red candles you can enter the sell position. Now, if the price goes to the upper band, but the RSI indicator is bearish, divergence has occurred, and in this case it is better to wait for red candles to sell. If the price goes to the lower band, but the RSI indicator is bullish, the divergence still occurs and a buy signal is given. Apply for buy positions with the basics of candlesticks. But the secret I got in this strategy is that when the price hits a support or, on the contrary, a resistance, the first thing it does is a reaction. The price tries to break out of the Ballinger cloud, but then it can't collect. Well, this means excessive emotions. And you can't control it, and you can see that sometimes the charts of amateur traders are empty and they only enter with a strong trend. It is the same feelings that the price wants to reject. High risk to high reward in this method, the clouds lead to the display of emotions and show which side is the most conflicting price, and with FIBO drawing and its 0.5 numbers, and more importantly than 0.618, this number is very important to know when it comes to these numbers. If it hits, we have to wait for the stop hunts above, then when it hits a fake, all of us will enter. Even EMA is our help. If the price is low, EMA gives us a strong confirmation.